I'm Ken Popeye, a member of the board of the Kiwanis Club of Shallotte, South Brunswick Islands. Thank you for joining us for the Money Smart Financial Education Program. This program is made possible by the partnership and collaborative effort among 3 organizations in Brunswick County, North Carolina: the Brunswick County Literacy Council, Brunswick Family Assistance, which is a social services organization in Shallotte, and the Kiwanis Club of Shallotte, South Brunswick Islands. The curriculum we have developed for this class is called Money Smart, which was actually developed by the Federal Deposit Insurance Corporation. The FDIC is a federal banking regulatory agency and the custodian of the Federal Deposit Insurance Fund, which protects depositors in the event banks fail. The curriculum consists of 6 classes or units, each of which is 30 to 45 minutes in length. The instructors for the program include a banker, 2 tutors from the Literacy Council, one of whom is a lawyer, and the other who has had over 20 years experience in the financial services industry, a retired CPA, and a retired auditor and official of the U.S. Department of the Treasury. Let me give you a brief summary of the 6 classes. The first class is Bank on It, which is all about financial institutions, what they are, the deposit accounts, services, and products they offer, including mobile banking and financial applications, and why it's important to keep your money in a federally insured financial institution. The next class is Check It Out, which talks about checking accounts. You will learn how to deposit your money, how to write a check, how to maintain a check register, and the importance of balancing and reconciling your checking account to the bank's records. The third class is Setting Financial Goals, Spending and Budgeting. Here we focus on the need to keep track of and record your expenses, tips on how to spend wisely so that you can save money and increase your income, how to prepare a spending plan or budget to help you live within your financial means, and how to set realistic and attainable financial goals. The fourth session is Pay Yourself First. Here we discuss the importance of savings to financial well-being. We also talk about and give tips on how to set aside money for saving even before you pay your bills. And we'll also cover the types of savings and investment products and instruments that are available to you. The fifth session is called Charge It Right, which is especially relevant to you high school students who will be heading off to college or joining the workforce. In this session, we'll talk about the differences between credit cards and debit cards, the terms, conditions, and consumer protections that apply to each type of card, and tips on how to use your card, both credit card and debit card, responsibly, including protecting your financial and personal information and the potential adverse consequences of failing to do so. The final session is called Paying for Colleges and Cars. We begin with a brief discussion of loans, what they are, the types of loans, and why you need to keep a good credit rating in order to obtain approval for loans. We then dig into the cost of cars and compare leasing versus purchasing a car. Finally, we talk about the costs of college and the importance of submitting a free application for federal student aid, or FAFSA. This is the key document that you'll need to submit in order to try to get money from the federal government to pay for your college expenses. We'll also cover the various types of financial aid opportunities that are available to you, and the importance of maintaining your student loan responsibly. So that's the program. When you've completed the program, you will have the skills, knowledge, and tools to maintain your finances effectively and responsibly, and to make smart and informed spending and financial decisions. Thank you again for participating in the Money Smart Financial Education Program. We hope you enjoyed it. Take care, stay safe, be smart financially.
Hi, I'm Mariah Hayes with United Bank. I have been with United Bank for 9 years as a branch manager. I have also been in the banking industry for over 11 years, and I've held every position in the retail bank, from teller to customer service representative to assistant branch manager and manager. So today we're going to discuss the course Bank on It. In this course, we are going to identify the types of insured financial institutions. We're also going to identify 5 reasons to use a bank, describes the steps involved in opening and maintaining a bank account, 2 types of deposit accounts, additional bank services that come with your deposit account, and also the functions of the bank customer service representative, teller, loan officer, and branch manager. So what do banks do? Banks are businesses that offer a safe place to keep money. They're also known as financial institutions. Banks have a wide variety of financial services and products. Why keep money in the bank? There are 5 main reasons to keep your money in the bank: safety, convenience, cost, security, and financial future. Safety, your cash can get lost or stolen, and it's also hard to keep track of. For convenience, if you are working a job, there are direct deposit where they can deposit your payroll directly into your account. This allows you to avoid lines at the bank. Also, most places do accept debit cards where you can use those at stores, online, anywhere Visa and MasterCard are accepted. Cost. If you don't have a bank to cash your check, most places do charge a fee when cashing a check. Also, if you are needing to issue a check to someone and don't have an account to do so, you have to purchase money orders. These have expenses as well. Security. When keeping money in a bank, it is federally insured. Also, banks provide consumer protection with lending practices and checking accounts. Your financial future. With checking accounts, responsibility will help you achieve your financial success by learning how to manage your money, make investments, build relationships, and credibility. This will allow you in the future to be able to purchase a vehicle or apply for a mortgage. So there are different types of financial institutions: banks and credit unions. Banks are state or federally chartered for profit. They offer commercial and consumer products. Credit unions are federally chartered not for profit. These financial corporations provide services to their members and are memberly owned. Most of these require certain qualifications in order to be a member. Once you choose which type of financial institution you're going to use, opening and maintaining a bank account is not as difficult as you might think. There are 4 steps that you have to do. You'll want to open the account. This can be done with the customer service representative. Once you establish your account, you'll want to make deposits and withdrawals. These are typically done on the teller line, through the ATM, or via mobile app. You'll want to keep a register that will record interest and fees that you may earn or be charged on your account. You'll also want to keep up with your balances so you know what you have in your account. This can be done through online banking or your provided bank statement. At account opening, you will be asked to provide certain documentation to verify your identity. The bank representative will ask for your name, address, date of birth, social security number, or I-10, and they'll also want to see your state or government issued ID. This is to help protect your identity. Some of the common banking terms that you'll hear when you're in the bank are deposit, withdrawal, balance, fees, and overdraft programs. A deposit is when you put money into your account. A withdrawal is when you take money out of your account. And a balance is what you actually have in your account. Fees are money charged by the bank for different services. An overdraft program is an option in the event you overdraw your account and spend more money than you have in your account. Some of these options are lines of credit or linking a savings account to your checking account. There are two types of deposit accounts that we're going to discuss today. Checking accounts is one of the most common accounts that people do have. These allow you to pay your bills and buy goods by using checks or an ATM or debit card. You will receive a monthly bank statement on your account. This allows you to help track your expenses and create a budget. Anytime you go in for a checking account, you'll want to compare the different types of checking accounts that are offered to make sure you get the best fit. So why would you want to choose a bank over a check cashing service? If you were to get paid weekly and receive a check, and you went to a check cashing service, you would get most of those services charge around $5. This could add up to $20 a month, which could add up to $240 for the year. At a bank, a standard fee is $5 a month. Over 1 year, that would calculate to $60. And if you were to get checks at $18, would be $78. That could give you a savings of $162. You could actually save even more than that if you chose not to use checks or if you were able to qualify for a free checking account. The second deposit account that we're going to discuss are savings accounts. These are designed for you to save money for your future. On these accounts, you are paid interest. This means that the bank will pay you to keep money in your account. You'll earn a percentage of your balance, so the more that you have in there, the more that you'll earn. Typically, you are not allowed to write checks on these accounts. They are limited to withdrawals. The standard is about 6 per month. The fees to open this account are a lot lower, so you can open an account with just a few dollars. Banks also offer non-deposit accounts, such as stocks, bonds, and mutual funds. These products are not insured by the FDIC, so you could lose some or all of your money that you invest in these products. These are typically done with a wealth advisor or an investment firm or a financial advisor, and they offer higher interest rates and earn more for your money. So once you establish your checking account, you will have options to add on an ATM or debit card. ATM cards are typically used at ATMs. They can be used to withdraw money, check balances. Some stores may accept ATM cards. Typically, when you go to a store, you're going to use your debit card. This is allowed to be used as debit or credit. Debit would take the money out of your account right away, and credit allows a few days space. These are accepted anywhere that major payment systems take credit cards, such as online, in stores, or over the phone. There's also store value cards. These are not linked to your bank account. These you may know as gift cards or prepaid cards, and generally are used by people that aren't able to qualify for a checking account. Some of the other banking services that are offered are direct deposits, money orders, telephone and online banking, ATMs, money transfers, debit cards, store value cards, loans, and remittances. A direct deposit are paychecks that go into your account electronically. Money orders are bank checks that certify funds. Telephone and online banking allows you to access your account at any time from anywhere. ATMs are automated teller machines. These are standalone machines where you can withdraw funds, check your balance, make deposits. Money transfers are also known as wires or ACHs. This allows you to move money from one account to another. We talked about debit cards and store value cards. Loans allow you to borrow money from the bank at a cost, and remittances are payments, typically overseas. When you open your account, you'll get many disclosures, and one of those will be privacy notices and opting out. Privacy notices explain how your information is handled and shared. You can always opt out of this by reviewing your options and telling your credit report agencies not to share your information. The contact information is listed here. Identity theft is a significant problem that we see at the bank. If it's not detected early, it could take years to repair the damage on your credit rating, and it could cost you your life savings. There are three main common types of identity theft: phishing, farming, and skimming. Phishing is sending fake emails to get people to reveal private information. Farming is cyber attack that redirects one site's traffic to another fake site. And skimming is fraudulently copying credit or debit card info. Skimming is likely used at gas station pumps or ATMs. You always want to protect yourself when shopping or banking online. Some of the ways to do that is by not clicking on links that you're unfamiliar with, verifying who has sent you an email, and not sharing personal information through online avenues. So what happens if you do fall victim to some of these security scams? The first thing you would want to do is file a police report. You'd also want to place a fraud alert on your credit report and contact major check verification companies. You'll want to contact your bank as soon as possible as well. When contacting your bank, it is important to know what the bank employees are. Here we have the branch manager, bank teller, customer service representative, and loan officer. These are the main roles of the retail bank. The branch manager is an executive who oversees the branch at a financial institution. They manage staff, resources, develop and attain goals, customer service, and are responsible for growing the branch. A bank teller is the first person that you'll see when you enter a branch. They serve the customers by completing account transactions such as check cashing, making deposits, making loan payments. The customer service representative answers customer questions about banking services. They're going to be the person that opens your account and provides you with any information or maintenance on your checking account. A loan officer evaluates and authorizes approval of business, real estate, and personal loans. So some of the important things to remember when you're going in to open a checking account is to always ask for help and ask questions. Don't sign anything you don't understand. Ask for written information to take home to review. And use the choosing a bank and bank account checklist. These can help to make sure that you do get into the right product that best suits your financial needs. And always remember, if it sounds too good to be true, it usually is. As we wrap up this module, I'm going to answer 3 questions that you may have. The first question was, why should I use a bank or credit union when I can cash a check at a store or a check cashing service? And this goes back to where we discussed the 5 reasons to use a bank: safety, convenience, cost, security, and financial future. The next question is, why is it important to keep your funds at a government-insured financial institution? If you're keeping your funds at a government-insured financial institution, this will give you peace of mind, and it'll also create confidence in the banking system. You will know that if something were to happen to the financial institution you're at and they fail, that your funds are federally backed and insured. So the last question is, do banks still offer free checking accounts for students? And if so, do they convert to a regular checking account? Many banks do offer free checking accounts to students. Depending on the bank and product type, they may convert to a regular checking after the student graduates or at a certain age. Typically, the age is around 23. This is why it's so important to do your research on the financial institutions in your area to see what products and services they offer, and then you can find the best account that suits your needs. Congratulations, you have learned about the different types of financial institutions, basic banking terms, opening and maintaining bank accounts, difference between banks and check cashing, types of accounts, banking services, and what the bank employees do. I hope this has been helpful in informing you on how to select the correct bank and the correct products for your needs. Thank you for listening, and we wish you the best.